Hey guys, welcome back to the channel. So today I'm going to be breaking down a trade that we caught on my VIP trading room. It was on US30 and I'm going to break it down for you guys and show you guys how we caught it using a simple yet effective ICT trading concept. So yeah, let's get into it. Before I get into the chart, I want to, however, show you guys um, the trade. So let's just do this, jump onto Telegram quickly. All right, so this was the trade, and this is what we closed out at. Easy 43 grand, and we took about 3,000 pips on it. So yeah, no over leveraging, keeping our risk minimum. And this was during the trade. And I just want to show you where the signal was. So here we are. Okay, so there was a signal on the 27th of April by US30 at 1432 GMT plus 2. That was our SL, and basically trailed it all the way to 3,000 pips. All right, so let's get into it. Okay, cool. So if you haven't already watched the last couple of videos of mine on the channel, please do so, because it basically explains, my directional bias on US30. So just to quickly run it through for you guys, we had this descending pattern throughout the course of 2022, where we created lower highs and lower lows in the market. And price had respected this trend line to the downside, right? So each time we reacted off this trend line, it acted as dynamic resistance, right? So we had resistance at the U-turn area up here, next U-turn area was here, next one there, and eventually price broke out during November, December last year. So we had this beautiful breakout after this impulsive leg. So we had this impulsive leg, and then price gave us this correction. So we've been correcting in this manner ever since. Um, so this is building onto my bias of a impulse, which was here, and then you get the correction, and then the next leg of the impulse. So I have been bullish on US30, and these were the reasons why. So I was expecting price to, find some sort of support at the 33,500 area, and then off that area, give us the next impulse, hopefully a breakout above this channel that we've been playing at for this consolidation or correction phase. So yeah, that's what I was looking at on the daily time frame. Then Okay, how I used ICT is the following. So ICT teaches the fair value gap. The fair value gap can be identified here at this level there. So if we look at this fair value gap or area of imbalance, right? We know that we've taken out structure to the upside here. So we've taken out structure there. That was my last lower high in the market. We've taken that structure. Price needs to retrace. So we've taken liquidity above that high. Price is now going to start to retrace. After we've taken the liquidity, price is drawn to areas of imbalance or inefficiency in the market. In this case, we've got this point of interest being the fair value gap. The fair value gap can be found after 3 consecutive candles. So you've got your first one down here. You've got your second one up here. And you've got your third one there. And as you can see, price didn't come back into this fair value gap here. Why is this fair value gap of interest to us? And I'm talking about from pretty much here. Why was that fair value gap of interest to us? Quite simply, it's because after this candle here, so once you get the 1, 2, 3, it's called the power of 3. You got 1, 2, 3. Oh, sorry, 1, 2, 3. The next candle or any of these candles after that did not trade into this fair value gap. As you can see, you zoom in, no candle traded in. So this is an area that needed to be mitigated, or you needed to come and fill that inefficiency at that area. So we were expecting price to draw into that area after we've taken this liquidity above this high, which was there. So that was the day before. I think this was the 25th. If we play one candle, we'll look at it the 26th. Too fast. Okay, so the 26th comes in here. Right. So the 26th comes in at that area, right? And the day of our trade was the 27th. So we had noticed that price tapped into this fair value gap. And the next day I was looking for buying opportunities, which was the 27th of April. Some of you might question, okay, why did we use this fair value gap and not some of these fair value gaps down here? Why was these not the areas of interest to us? Well, quite simply, these areas or fair value gaps or imbalances are much smaller than this one up here. So price does not necessarily have to come back down to those smaller areas. In a case where you've got 3 of these here and this one being the biggest one of the 3, price is more than likely going to trade back into the bigger one as compared to these 2 here. Remember, those that got in here, it's not going to look to give them premium entries again, or sorry, discounted entries again. That's just the way the markets move. It's more likely going to trade into the bigger fair value gap and then react off there. So that's what we were looking at, and then let's just take these out. And just something to note, we also noted that we had a support level up here turned resistance. So you got 1, 2, 3 breakout, came back, retested. That's the 4th time. 5th time was when we retested again, breakout above, came back down, traded into the fair value gap. So now this level was a target area, one of our target areas for us. So just to note, 33,650 was, or 33,700 in fact, was a more accurate level of resistance. So we were looking for buys, and we were looking at the 33,750 area to get out of our buys or secure profits at that level. Okay, so let's drop down to the 4-hour time frame. So on the 4-hour time frame, you can see a clean reaction off here. And again, you've got the same thing, this imbalanced area here. Let's drop down to the 1-hour time frame. Okay, all right, this is what I like to see. So above our daily fair value gap or imbalanced area, we've had numerous levels of liquidity sitting or resting below. So we've got these levels of equal lows pretty much marked out. And it would be my ideal setup where I need to see price sweep some sort of liquidity below the equal lows or relative equal lows. And being just above my point of interest. So price comes down, sweeps the liquidity, and by doing so, taps into our daily point of interest. So at this point, I'm looking at a U-turn in the market. I'm looking for a potential opportunity for a buy, for a bullish move to the upside, all the way up to my resistance level, which was 33,750 to be exact. This one's not drawn too correctly, but that's the area I'm looking at. So once we saw that, I waited. It's a patience game. Trading is always about patience. And if you aren't willing to be patient, you are going to lose a lot of money. So I waited, and this is what I waited for. Let's play this. Right, so we had the reaction trading into the next day now, and Okay, we can really start to see price maintaining this low. So we are failing on the lower time frames to break structure, right? If you look at your 15 minutes, this is what you're going to see. There we are. So 15-minute change character up here when we broke this high. So your 5-minute, your 1-minute, 3-minute, etc. would have changed character all above this area. So you mark that as your change of character. And we maintained, the important thing to note here is that we've been maintaining these lows. So we've been maintaining these lows. First low was here. This is always what you want to see before you start buying. You want to see price hold the lows. If price can show you that it's holding the lows, then the next probable area for it to run to is to run and take an attempt a move at the high. So we've been maintaining these lows. Can you see these lows? We've been maintaining these lows, right? And then let's go a little bit forward. All right, so we were looking at 2:30 my time, which was here. Okay, so here, I think it was somewhere here. All right, so okay. So it was around about this time where again we took the high and we tapped into that daily area of interest. So my next area of interest was here. We had this imbalanced area here, and we had this candlestick here. So we had what I call, so this was the area of demand in that area. Mark that as a demand. Okay, so that area of demand up there, you see, so that was the area of demand. And I was waiting for price to pretty much come back, tap into this region and run up from there. So you can already start placing your trades or your limits. Stop loss would have been below this low down here. And your take profit. We're looking at 750, which was all the way there. All right, so that's the trade I was looking at. Simple concepts, and watch how this plays out. There we go. There. So we got entered in there, and bang. You can see that we just want to pause it for you. You can see that we maintain the lows. It's very important that you look at this. Keep maintaining the lows and taking out the highs. All right, so there we go. And bang, straight into our TP. There we go. So there, that was a 3,000 pip move fast, 3,300 pip. It probably ran a lot more than that, 4,000 odd pips. But yeah, that was the move we were looking at. Change of character was here, came back down, spiked into our demand area, stop loss below the low. And yeah, it was a brilliant 1:3.25 trade. And it was very, very simple. Yeah, if you guys are interested in using the broker that I'm using, it's highly recommended. They are called Raise FX. So just do this for you guys, show you guys. All right, so this is my recommended broker. It is RaiseFX. You guys can create a profile, log in, and start uploading your documentation. The accounts are in ZAR or USD, so you can get a USD or a ZAR account. Your leverage is 1:500. You've got, same day withdrawal, so you can be assured that your withdrawals will come to your bank account within the same day of withdrawal. You've got direct access to my team at RaiseFX, who are very, very helpful when it comes to uploading your verification documentation and so forth. And yeah, if you've got any queries and whatnot, they will look after you. So I will drop the link in the description box below. You guys can check them out. And for those of you who are also interested, I've got an online course. So that's running. You can go to www.ssforexacademy.com, and you can purchase my course for $190. I do also occasionally post discounts, so be on the lookout on my Instagram pages for that. It's Shakil_SSFX. And yeah, if you guys enjoyed this content and would like to learn more, and yeah, just don't forget to hit the like, subscribe button, comment down below, and I'll be back with more of these helpful breakdown videos for you guys to take some nuggets out of. Anyways, until we meet on the next video, take it easy. Cheers.